And he would always say, it doesn't make any sense to take partials because you incur the initial risk. And then as you take something off, you're not getting paid for the initial risk. I don't give a fuck about that initial risk. Once it starts paying me, I want to get fucking paid. I'm taking something out of the trade. And that logic to me is absolutely asinine. You are in this to make money. You're not in here to say, here, I got a trophy. It went to my target. It's going to my target many times, but I don't need it to go to my fucking target. I'm rolling that account up. I'm parlaying that account up, and I'm quickly removing all that leverage that I have tied up in that trade. I can do something else while I'm scaling out. You don't see that shit. That's how I ran these fucking small accounts up. That's how I did it. But you want to listen to these fucking clowns that don't trade, that don't do shit on there. They make these little squiggly fucking lines and poor ass jokes. These people don't make fucking money. They don't make money. They don't fucking have consistency, but they hate fucking people like me. And I fucking love it. I love it. So backtest for 3 months minimum, or 6 months of backtesting with tape reading. That means when you're tape reading, you're literally sitting in front of the charts, watching live data print on the charts, but you're not taking the entries. You're not even pushing a demo account. You're doing it for experience, reading the price, watching how it reacts. And then what you're doing is you're seeing, say, for instance, you're watching the S&P, okay? And you think it's going to go down to a particular level. You know you're drawing liquidity. You know it's likely to go lower. You're waiting for the fair value gap to form, and you want to watch and see how it gravitates up into it. How does it react? Does it immediately deliver after it goes into the fair value gap? Does it hang around a little bit and then start moving in your favor? Does it go down and then come back up to it one more time and tap into it? Which is the reason why I don't teach trailing your stop loss aggressively, because that's a tendency in the marketplace. The algorithm can come back and touch that fair value gap one more time. And that's a normal thing. You don't see that shit in books. It's just, well, you got stopped out and, maybe you can take another trade. Fuck that. I'm going to go right back in that market. If I get stopped out and everything's true, I'm going to use that retouch of a fair value gap later on that I've already entered on, because I know they can be reclaimed, recycled, reused, if you will, because they are real support and resistance. You're talking about support and resistance is a joke in your mind community. It isn't if you're using the fair value gap, because you can literally use fair value gaps as points of inversion, where once they go through it, then it should act as what? If you're looking at a fair value gap that you thought was going to be bearish and it trades through it, shows no respect to it, when that bitch comes back down and touches that again on the buy side, I expect a trade there. If everything is equal, and I know I was wrong on my short idea, and it's shown me I'm absolutely wrong, I'm going to buy that fair value gap that I would have been using for a short. Isn't that support and resistance theory? Yes. But the problem is that idea of support and resistance, you don't know what fucking high or low to put it on. Look at everybody on Twitter. Look at everybody on TradingView, on YouTube, that uses trend lines. How the fuck did they arrive at those trend lines? And how many times is it really respecting it? They'll draw it after it's happened. Oh, look at this. This is where it touched. No, draw that fucking line before the market comes down and touches it and reacts. I don't see that ever. I don't ever see that. I'm always looking for it, but I never see that shit. But how many times have you seen me and my fucking students recording our entries in management, and it's beautifully respecting the fucking things that we're doing to the fucking level right there? Bang. Laser guided precision. Poor Goldman Sachs boys. So you got initially, right away, going into anything with me, you got a minimum of 6 months of never pushing a button, because you need to know how you're going to react to seeing price. Are you going to be palm sweaty and anxious about it? And you're not even in a demo, because you want to be right. And you're going to see how removing the idea of being right or wrong, take the game aspect out of it, because that's bullshit, because this is not a fucking game. It's not a fucking video game. This will wreck your fucking ass. It'll ruin your shit if you don't know what you're doing. So you got to respect this risk. And I'll talk a little bit about that in a moment, but you want to be listening to your internal dialogue of what you think you see in the charts. And then you want to write that down and screenshot it as you're doing it. And you're tape reading, you're not just simply watching price. When you think you see something, you screen capture that. and you quickly put an annotation in there. What you think? You don't have time to be fully automating the narrative in a text format. You're literally just trying to encapsulate that moment, what you thought you saw, and then there it is. So the way you could do this is pre-type on TradingView or whatever platform you're using, fair value gap bearish, fair value gap bullish, draw on liquidity, and stop loss, first partial. Have those already on your chart, and then when it's doing what you think it is, drag that little text over there. You see me typing it out because I'm proving that I'm doing this live. Okay, everybody bitches about, oh, it's a cherry pick. Bullshit. Dude, I'm doing it right next to these other guys that are doing live streaming. I'm not going to live stream. I'm not going to do that. I cannot do that and think clearly about what I'm doing. But there's no denying that what I'm doing is I can only be typing and annotating and managing a stop on one chart. In TradingView, if you're working with whether it be demo or your live account, you can only do one account. They're not letting you run two. It's the same fucking account. So all that shit goes out the fucking the window when you really take a step back and say, okay, no, this shit's really happening. It's really happening. Yes. And you won't even worry about that nonsense if you start doing the things I'm talking about. Go look at old data, study it, get your back data stuff. How many times it's formed, when it failed, and what does that look like? I'm absolutely going to do that for you in 2023. When we come back together again in February, I know it doesn't seem like I even went away yet, has it? Anyway, in February, I'm going to start off with doing the very things I'm talking about right here. I'm going to show you how to literally go into backtesting. How I'm going to literally sit down and backtest. I don't know how long I'm going to do it, but I'm going to show you exactly what it is that you're doing, why you're doing it, what you're supposed to be doing. And then we're going to be doing live tape reading the rest of the fucking year. That means I'm going to pull out points in the marketplace where I want you to study. I'm going to show you where I think the draw on liquidity is, and I want you to listen because I'm going to prompt you. I'm not going to say this is a short. I'm not going to say this is a buy. I'm going to say, what do you see right now? You're going to know based on that model in 2022 that's on YouTube right now. It ain't going to change. It's not going to manifest into another form of it. Okay, it's not going to mutate and have 15 other things added to it. I'm just simply going to say, what do you see right now? I'm not going to be on Twitter looking for your responses. I'm not going to be looking at the chat room ever because I know there's going to be horse shit in there. I don't give a fuck because they're going to see consistency next year. They're going to see it and they're going to choke on it. But you're going to learn from it. You're going to benefit from it. You're going to see exactly what this algorithm does, when it's supposed to do it, why it's supposed to do it, and then how consistent you can be in knowing where it's going to go. Because that's that crutch that many of you need. And that's what my private mentorship had. They had that crutch of my experience of saying, this is where it's going to go on the daily chart, and it's going to reach for these levels on the intraday. So they had that going in. All they had to do is use what they learned in mentorship. They learned that model. I didn't spell it out just like that, but I've actually used that model many times in my examples. So it's not like I created just for that. The whole process of outlining it was for my daughter to say, okay, here's what you can do. This is what I think you can do. And she's not interested in trading. So you got 6 months of backtesting and tape reading. After 6 months, okay, then you go into a minimum of 3 months of demo trading. Now, I personally say 6 months of consistency. If you think for a fucking second that you are ready to go with a live account before at least what I've said here and expect consistency, you're going to be frustrated. You're going to blow your account. You don't even know yourself. You're going to ruin yourself. And you're going to be a statistic. You're going to be an ICT statistic where, you know, the people that rush through it and try to do it quicker, they fail and they think the shit don't work because of that. Anybody else's stuff, when they rush to go through it, there it is. It's failure. Well, it's you. It's you. You're trying to do it too fast. And you haven't seen a full year. You haven't appreciated the level of consistency and the ideas as the market dynamics I've outlined here. They happen all the time, folks. How do you think I'm finding all these examples all the time? I mean, think about it. Okay, if it's so easy to cherry pick it, I want to see somebody else do it. Cherry pick it. Do it. You can do both sides of the marketplace. Record one trade going one way and one trade going the other way, but it better be fucking precise entries like mine. and it better hit targets, and you better be moving a stop loss that entered the time when you put it in there. Don't be putting no 24 contracts or 40 contracts on a simulator account where it ain't even being recorded and say you made $45,000. That shit don't fucking float. Okay. So 3 months minimum demo, minimum. And I'm suggesting you should do 6. Because if you are 6 months consistently following the rules and the model in the only markets you're going to be trading, but ICT, which one am I going to trade? Do I trade the ES? Do I trade the NASDAQ? Do I trade the US 100? Do I trade the US 500, the US 30, or the Dow? Which one do I trade? Whatever one you settle on. Don't let me influence that. You already know which market you want to trade. You're just looking for me to co-sign it or somebody else that might be making money consistently. That's what it is. Everybody wants to see, what are you trading? Synthetic indices. I don't know anything about that shit. I don't know if my stuff works. I don't even know what that is. But I have a lot of African folks that will ask me that, and I don't know what that is. Or, do you trade the volatility index? I don't fucking trade that. No way. You see what I trade. I'm trading ES or NASDAQ. That's it. That's it. It's a simple, small little universe. If I had to trade just one, ES. And I would never, ever, ever need to do anything else ever again. I wouldn't have to look at any other charts, ever. Just ES. All I got to do is look at it in springtime and see when there's a divergence to set me up the sell model. And I look for it in the fall to be a buy model. And that's it. I don't need to look at anything else. Because everything else is going to be in that chart for ES or whatever market you're trying to follow. But if you want to have ridiculous insight and you want to have the prowess that you see me demonstrated and you see my students demonstrating in their examples, they're out there recording themselves doing it. They're on their own little YouTube channels in their own little lane doing their own thing. And I'm not telling them to get in those trades. And man, that fucking feels amazing. It feels amazing seeing them able to do that. Like I love showing my sons. I show my wife, look at this guy. Look what he just did there. Look, and then when I share my examples, I'm recording. You don't know what I'm doing. You don't know what I'm doing. You don't know what trades I'm taking. And then I put it up there and then everybody comes behind me. Look at this. I took the same trade and they've recorded their same shit. There's no fucking way you can go back in time. Record all that compressed data, all that delivery and price, annotations, all the bullshit. There's no way that can be faked. That means there was a transfer of knowledge from me to them. That's proof of concept. That is proof the shit works. And it means if they can do it, you can fucking do it. And don't let no fucking clown anywhere tell you you can't. Because I'm telling you, you can. You absolutely can. I've made this obtainable for all of you. Yes, it takes work. Everything does. Every fucking thing takes work and effort. It's going to be a hard press for some of you. It's going to be easier for others. And you have to find out what it's going to be for you. But you just simply got to dig your heels in. Dig your heels in, say, fuck it. I'm going to put up with whatever I got to put up with. I already know it's going to be hard because if it ain't rough, it ain't right. That's just the way it is. Because if it was easy, everybody could do it. And you don't see that. You don't see it. So you have a full, complete year if you do it right, optimally. 6 months of backtesting and tape reading. And then 3 to 6 months of consistently aiming for a demo results or, a track record, if you want to go so far as to say that, for 6 months that are consistently profitable. Then and only then are you prepared mentally, emotionally, to even consider, and I'm not saying that you should do it, but then is when you should consider putting real money in. And that's a decision you're going to make. There's no ICT lesson that says, okay, this is the deciding factor. This is when ICT says I should do it. No, you are going to make that decision. Some of you may never do it. You may be too scared, and that's fine. That means you can't do it. But if you're good in demo, you can run signal services and you make money doing that. I got students that are doing it. They're not even on a live account. They can't take the personal risk on themselves. That's their weakness. So what they've done is, okay, I'm good in a demo, but I can't do well when it's money because I take the losing trades and it affects me mentally. Okay, well, why don't you just run a signal service? Because if you're confident in your demo and you know it's not going to hurt you, there's no kryptonite there. And if you're consistent, there it is. And they're running that. There it is. I mean, is there anything wrong with that in my opinion? Fuck no. No, because if the people that are subscribing to someone like that, they already know if it's going to work, they're going to keep subscribing. If it doesn't work, they're not going to subscribe and continue. So everybody's getting what they're looking for. Because a lot of people out there that can't trade. They can't trade. They can't do the pushing of the button. They can't absorb the uncertainty that is inherent in this industry. And there's a lot of uncertainty. And it stems internally. Because if you can take yourself out of the equation, all you're doing is looking for a market that's going to go up or go down. And where's it going to go up to, or where's it going to go down to? And where's the market at right now? Has it created an imbalance? Has it taken stops? That's the questions you're asking. But see, what you do, and I did when I was younger, I bring all our horse shit to it. Wife left me. I don't feel well. I'm not able to bench press this much. My friends are doing better than me in their job. Fucking Carl's got the parking spot again this month. Everything's going to be a plague and a distraction. And you're going to bring all that nonsense into your decision making, and you're going to clutter up this whole thing. And I personally think that subconsciously, I think we as humans like to do that because it provides us a perfect excuse why we fail. Oh, of course we're going to fail. I have all these other things to contend with. No, you didn't. You brought that shit into trading. You got to find a way to be able to remove all that outward influence, these outward factors that will plague anybody. Doesn't matter if you have a high aptitude in terms of intelligence, or if you're just a common person like I was when I came into this. I'm not an intellectual giant. I'm not superior in my intellect. I'm a blue collar guy. Like, I'm straight out of freaking Middle River, Maryland. I mean, I'm like, that is the definition of blue collar. They called our neighborhood Cardboard City. Literally, it doesn't exist anymore. They built new, I think it was Ryan Homes or Ryland Homes. I think they put those over there, right across the street from Middle River School. My address as a kid was 30 Henderson, and it was literally right across the street from Middle River. But you got to find a way to keep that stuff from coming in. You can't invite it. We're about halfway there, folks. Hope you packed the fucking lunch. Know and respect the risk. Okay, and now obviously, that's the part everybody wants to ignore. Well, I just want to win. Just show me how to win. I don't want to know about a stop loss. I know I should use a stop loss ICT, but I don't know where to fucking put it, so I'm not going to use it. And then when you blow your account, or you go in severe drawdown, what do you feel then? Weigh out that right now. Okay, if you haven't even started pushing a button yet, weigh out the pressure of fearful of knowing where to put a stop loss versus not using a stop loss and regretting it, and how bad it can be before you either get out or they margin call you. Which one do you want to suffer through? Obviously, you want to flounder in the beginning of learning where to put a stop loss. And that's the benefit of giving yourself time. Folks, that stuff is a complicated thing. You can't just simply say, here's the rules, because I've already done that. I've already shown you where to put a stop loss. The fair value gap, where's the high of the fair value gap? Okay, if you allow yourself in terms of the risk to have it to the swing high behind the high that forms the fair value gap, I'm going to use the swing high. But if I know everything's in my favor, I'll use the high of the candle that makes the fair value gap. And that's where I'm going to stop loss it. And you see how the market performs. Look at my examples this week. Don't look at the total amount of money that was being risked. Look at the precision placement of the stop loss and how it was never in jeopardy. I was not sitting there watching those fucking trades thinking, I hope it doesn't hit my stop. The stop's there to do its job. It's being paid to do its job. Get me out at that price, because I don't want to be in it going higher or lower if it's moving against me. I'm not worrying about that stop loss.